Stay on top of stories about stocks that may impact the market or your portfolio today in Stocks Making News.
Well, AT&T recently completed its acquisition of satellite TV broadcaster DirecTV in a multi-billion-dollar deal. Here to pick this whole thing apart for us, with us, from both the value and the momentum perspective, are Dave Bartosiak and Tracey Ryniec, although not in that order. You're momentum, she's value. Tracey, we're going to start with you. This deal is reported to be AT&T's biggest acquisition since its 2006 purchase of Bell South. So under the terms, real quick, of the merger, DirecTV shareholders received about 1.89 shares of AT&T common stock, in addition to $28.50 cash per share of DirecTV. That's on what the Direct shareholders got. What does this mean for the AT&T shareholders? Was this a good deal for them?
Well, I mean, they paid a 30% premium for DirecTV, but these days content is king, and all these, wireless telecommunication companies are trying to get into the content business and trying to expand what they can offer.
Yes.
As we know, the wireless world and all of that is a fairly closed community. There's only so many people who, need your services. You're stealing from all your competitors. So how do you grow your business? Well, AT&T is trying to grow it by getting into the video aspect and then trying to bundle everything, because that's what most consumers want.
Right.
Now, part of the problem is this deal was huge. They're really putting a big bet on this. But they also, are betting that nobody's going to want to cut the cord, that, the consumers aren't going to, get rid of the DirecTV or the things that they already have.
Right.
And so they're paying this big premium and a lot of money to try to get this growth, and that remains to be seen whether or not they can do it.
Sure.
Now, part of it is that they also are expecting some of the DirecTV customers who are not AT&T customers to move over and buy the other services that AT&T offers, and that's a way for them to suddenly look, we might be able to get all these subscribers. There's 39 million DirecTV customers that don't get AT&T, and they're expecting maybe 15 million or so, something might go over, but those numbers have not been put into the guidance because no one really knows what's going to be happening.
Yeah.
AT&T just had an analyst day, so they're really trying to tout this deal and the synergies that they're going to get. They did lay out what the cost savings are going to be, and they expect to save about $2.5 billion by 2018. So they're going to have this, big savings. Their guidance was pretty good. You can see I put up the chart with all the analyst estimates here. They raised estimates after the analyst meeting because they used to see growth in the single digits, and now they're going to see it in the mid-single digits. So that's better.
Yeah. So we have heard from the analyst community subsequent to the deal. For right now, anyway, they're saying it's a pretty decent deal for shareholders.
Yeah, but
For
some
right
like
now.
it and some don't. They're waiting to see. We won't know for basically years. And then you're going to have this weird situation where we don't know if people are going to start cutting the cord and all of this. Now, there's some aspects of AT&T's business that aren't, that they're getting a benefit from the DirecTV, and that is in Mexico, actually. I didn't realize this, but they just bought out over the last year 2 of the big Mexico wireless providers. Then they also have some DirecTV exposure down there as well. And they're really seeing a big opportunity in Mexico because they're a couple of years behind the U.S. in infrastructure. And if you ever go down there, you realize, why can't I get this at my hotel? And they're still building out the networks down there. But regulatory is good down there. They do encourage foreign competition. So they see that as a big market, but it's still all about the U.S.
Okay, and they had been having some trouble prior to this deal with their UVerse television division. We'll say.
that hasn't been that big of a...
That good for them so far.
I feel like you can't get it anywhere.
Right.
Because I was sold on that. I saw it in the mall and got all excited about it.
Yeah.
Then it was like, oh, you don't live in this little square somewhere.
Right.
Too bad, sorry. I was like, oh, thanks, AT&T.
Right. Dave, last time I checked, AT&T stock seemed to be holding well within its 52-week trading range. What's the whole momentum picture look like here?
It's got if you take a look at the chart, it's got a momentum style score for us of A right now, and I'm kind of scratching my head trying to figure out how that happened. Because if you're looking at the actual stock price, like you said, we're kind of in the middle of that 52-week range, but we're on the south side of this sort of point of control in the market. So where a lot of the volume went out for AT&T, it's like $36 range, right? Mm-hmm. And now we're firmly below that, I think, at 34, whatever it is today, I don't know, 34.50, let's call it.
Right.
And so when you're on the bottom end of where all that volume went out, that's kind of the top for you right now.
Okay.
And the fact that they did have their analyst day and the stock has been going down since then, and it's underneath its 21-day moving average.
Right.
You know, there's no momentum on the stock chart right now. Looks to be selling off. It's one of those things where it's like, if you buy AT&T at $32 and then you sell it at $38, you know, you'll make money all day, right? But at 34.5 right here, you know, what's the risk? You do get paid that little 5% or 5.5%, I guess it is now, dividend. But if you buy it at 34.5 and it dips down to 32, then, you know, there goes your dividend, right? So there's really no momentum in it. I wouldn't be buying it here. I think it looks like a little bit of a trap. Wait, you know, if you want it, I guess wait till 32. If you're, you know, if you really want that, you know, DirecTV, right? But like Tracey said, people are going to be cutting the cord.
Yeah.
It's happening. It's going to continue to happen. A couple of weeks ago, you know, the 5 biggest media companies lost something like $65 billion in market cap, just over a couple-day period, because, you know, this cord cutting is happening, and not just in the delivery room.
That's right. Thanks for pointing that out for us.
I think it also is kind of a value trap here, too, to some extent. I mean, it's trading a little around 13 times, and you look at that compared to the overall market, and you think, wow, that's really cheap. And then you do get this big dividend. But Verizon's trading around there, or maybe a little bit below that's their main competitor. And historically, 13 times, that's not that cheap for this company. So for me, it's not that great of a value here when all you're getting is mid-single-digit growth, and then you're basically getting the dividend play.
Yeah.
And a lot of people buy it for retirement reasons or whatever because they're getting the constant income.
Yeah, so hang up on AT&T.
Is it a better deal for shareholders or for the consumer? I guess time will tell, right?
Yeah.
Everybody loses.
Maybe.
Words of wisdom from Dave. He's always got those words of wisdom. That said, do either of you own the stock?
No.
No.
Okay. I just wanted to confirm. I know you said I wouldn't be a buyer, but I just wanted to confirm that for our viewers here. So you can get other stock information on our website, Zacks.com, if you're not there already watching this video or any of the others that we produce there. Don't forget, you can also watch our videos on YouTube, where you can subscribe to them and even comment on them. Until the next Stocks Making News segment with Tracey and Dave, I'm Terry Ruffalo.